Hi everyone. Welcome to Level Up Dividends channel. Investing in dividend stocks can offer several benefits. Income generation. High-yield dividend stocks provide regular income in the form of dividends. For investors seeking a steady stream of income, such as retirees or those looking to supplement their earnings, these stocks can be particularly attractive. Total return potential. Dividend stocks not only provide income through dividends but also offer the potential for capital appreciation. Reinvesting dividends can compound returns over time, potentially leading to higher total returns compared to non-dividend paying stocks. Historical performance. Historically, dividend-paying stocks have outperformed non-dividend paying stocks, especially during periods of market volatility. Dividends can act as a cushion during market downturns, providing investors with more stable returns. Dividend growth. Some high-yield dividend stocks have a track record of consistently increasing their dividends over time. Investing in such companies can lead to a growing stream of income, which may help investors combat inflation and maintain purchasing power. In today's video, I present 7 high-yield dividend stocks to buy for March 2024. You'll see that many of them are particularly interesting to buy. But before getting into it, I would like to make a call to ask you to push the like button or comment the video. This would help my video spread on YouTube and help grow my channel. I would really appreciate it. Now, let's get into the list. Stock 1, AGNC Investment. Dividend yield, 15.19%. Dividend safety, 23. Dividend growth, -4% per year in the last 10 years. Dividend growth streak, 2 years. According to analysts, even though the stock seems to be fairly valued, it still has some decent margin to soar up to $9.89. What I like about this stock is its affordability and resilience amid other REITs. Okay, AGNC doesn't increase its dividends every year and even decrease them from time to time, but we're talking about a 15% yield. It's already huge. Say it goes down to 10%, it's still huge. Stock 2, Nextera Energy Partners. Dividend yield, 12.33%. Dividend safety, 42. Dividend growth, 15% per year in the last 5 years. Dividend growth streak, 8 years. According to analysts, the stock could reach $32, which represents a 14% upside potential. Stock 3, Arbor Realty Trust. Dividend yield, 12.20%. Dividend safety, 50. Dividend growth, 15% per year in the last 10 years. Dividend growth streak, 10 years. If I could choose a top one from today's list, I would pick Arbor Realty. Besides the alluring dividend yield, this company has been growing its dividend from 2012 at a pretty decent rate. Arbor is independent of any loan, property owner, or area, in addition to preserving diverse income streams. No investment or customer surpasses 10% of assets or income, and no state makes up more than 20% of the portfolio. The earnings per share have been increasing for the last couple of years despite a little decline recently. Arbor also maintains one of the industry's lowest payout rates. This gives an additional margin of safety for the payout, which has increased year after year since 2012. The possible upside potential of the stock is at 21%. This makes Arbor Realty a good stock to gain in capital and in dividends. Stock 4, Leggett & Platt. Dividend yield, 9.29%. Dividend safety, 50. Dividend growth, 6% per year in the last 10 years. Dividend growth streak, 57 years. The stock has fallen quite dramatically since 2021. It is now trading at around $19 while trading at above $50 back then. This is why the yield has risen so high at 9%. I wasn't expecting this number a few years ago. Well, okay, the operating margin has decreased since 2022, COVID came by, the high inflation came by, people started spending less and the margins became so thinner. However, we're talking about an acceptable 7% margin. We're talking about investing in a dividend king that still has acceptable margins. At a 9% dividend yield, you should think at having a closer look at Leggett & Platt. Stock 5, MPLX. Dividend yield, 8.8%. Dividend safety, 41. Dividend growth, 11% per year in the last 10 years. Dividend growth streak, 11 years. Please notice that we're talking about a master limited partnership here. This status has special tax implications. As an MLP unitholder, you invest in the enterprise while receiving cash dividends from ongoing operations. This makes MLPs an attractive alternative for retirees or anybody else seeking a stable income stream. As previously stated, dividends are often tax deferred because they represent a return on capital. However, when you sell your MLP units, you will be taxed on the difference between the sales price and the adjusted basis. Assume you buy $100,000 worth of MLP units. You receive $4,000 in distributions, with $3,000 in unit depreciation. You simply need to pay taxes on the difference of $1,000. This applies to both the federal and state levels. 6 analysts recommend to buy the stock and 2 to hold it. The average price target is 9% higher. Stock 6, Plains All-American Pipeline. Yes, the name is correct. Dividend yield, 7.87%. Dividend safety, 50. Dividend growth, 0% per year in the last 10 years. This is an average, of course. Lately, the company raised its dividend by a whopping 19%. Dividend growth streak, 3 years. I like looking at the company's margin when assessing a stock's ability to pay dividends. For the case of PA, although small, the 3% operating margin is steady over time and the free cash flow, which is the amount of money the company uses to pay dividends, is above 6%. PA is not the most interesting stock to buy, but like MLPX, which operates in the transportation and storage of oil, the company's perspectives look quite bright. Analysts see a 7% upside potential for the stock, with 2 analysts recommending to buy it and 3 to hold. Stock 7, Pfizer. Dividend yield, 6.08%. Dividend safety, 75. Dividend growth, 5% per year in the last 20 years. Dividend growth streak, 12 years. According to analysts, the stock could reach $32, which represents a 10% upside potential. This is it. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.